Hello everyone. For today's discussion, I have chosen the topic ratios again. As you can see, two ratio questions are there. First question is about liquid ratio and current ratio. Also, they are talking about inventory turnover ratio 6 times. It has total current assets. So these kind of questions are like one of the areas where students used to get confused a lot when it comes to part B of the accountancy question paper. So without further delay, let us see how these kind of questions have to be approached, what are the methods that you have to follow, from where to start and how to end the question so that you will get the accurate answer. So as you can see here, first question, first let us break down. So a company had liquid ratio of 1.5. So you know liquid ratio means or acid test ratio, quick ratio, whatever you call it, same thing only. Liquid assets or quick asset divided by current liabilities, this is the formula, and answer is already given 1.5 is to 1. That means current liability is 1, liquid asset is 1.5 part of 1, 1.5 times 1. Okay, current ratio is also 2. So current asset by current liability, they are saying 2 means 2 is to 1. Inventory turnover ratio formula is what? Cost of revenue from operations divided by average inventory. Answer is already given 6 times. Okay, they are saying find out annual sales if goods are sold at 25% profit on cost. This is the details that is given here. So let us see how to solve it. So first of all, it had a total current asset of rupees 8 lakh is given here. So we can say, or we can establish the relationship between current asset and current liability first. So first what you have to see is, first you just roughly write all the formulas related to the ratios that are given in the question. Then what you are supposed to do, you first see in which ratio we can substitute the value that is given here. Here question is find out annual sales if goods are sold at 25% of profit, 25% profit on cost. So you know that if you know the cost of revenue from operations, you can calculate what? You can calculate the revenue from operations, which is basically what? Sales only. So annual sales, when they are saying, they are talking about actually revenue from operations. Now revenue from operations means what? Revenue from operation is the total of cost of revenue from operation plus profit. We used to call it as gross profit. So when you are adding these two, we are getting revenue from operations. If you know cost of revenue is coming in which ratio? Inventory turnover ratio. Next, gross profit, already it is given 25% on cost. So if you know cost of revenue, we can calculate 25% of that and we can find out the sales value. But in order to reach here, first we need to know what is, either if you are able to solve the cost of revenue. In order to find out the cost of revenue, first we need to know the average inventory. Average inventory means what? Opening inventory plus closing inventory divided by 2. That is the formula for average inventory. So inventory is connected to which ratio again? Inventory is connected to these two ratios, current asset and liquid asset. When from the current asset, if you remove stock or inventory, prepaid expense and all, we will be getting liquid asset. Here in this question there is no prepaid expense. That means inventory, if you are able to remove from the current assets, you will get the liquid assets or quick assets. So for that purpose, first we will substitute current assets value, current asset divided by current ratio. Current ratio equals current asset divided by current liabilities. Current ratio, current asset is given here as 8 lakhs divided by current liability. We know that if current liability is 1, current asset is 2 times 1. That means this 8 lakh is 2 times of current liability. We can say like that, right? 2 is to 1 means what? If current asset is 2, then current liability is 1 means current asset is double that of current liabilities. So here current liability, if it is 1, that means current asset is 2 times that of this. That means this 8 lakh is 2 times that of current liabilities. So in order to find out what is the value of current liabilities, how to find out? Your current liability equals half of 8 lakhs, because if it is 2 times more than 2 times that of current liabilities, right? So 8 lakhs half, how much? 8 lakh divided by 2 will be getting 4 lakhs. So 4 lakh is current liabilities. Now you got current liabilities, quick asset by current liability is 4 lakh only. You are getting 1.5 is to 1. That means if current liability is 1, quick asset is 1.5 times 1. That means quick asset is how much? 1.5 into 4 lakhs, which will give us how much? 6 lakhs. So we got which asset value? Quick asset value. What is the difference between current asset and quick asset? Current asset is 8 lakh, already you know. Quick asset, when we can call it as quick asset? When you remove stock or inventory and prepaid expense from the current asset, you will get generally the quick asset. So here, as you know, current asset is 8 lakhs, quick asset is 6 lakhs. If you are finding out the difference between these two, current asset will have an excess of 2 lakhs, which is basically what? Inventory, which is basically the inventory. So inventory you got. Now there is no clue regarding the opening inventory and closing inventory to find out the average inventory. So if no information is like that, no information is given regarding the opening inventory as well as the closing inventory, you can take the same inventory as which value? Average inventory. Average inventory. So that is there. So 2 lakh is there. We got it. Now next question is, so we have already what? Solved two ratios. Current ratio, quick ratio is done. Now we are thinking about the inventory turnover ratio. Cost of revenue from operations divided by average inventory. We can substitute it as 2 lakh itself, equals, answer is coming as 6 times. That means if you want to find out the cost of revenue, you can multiply 2 lakhs by 6. That means you will be getting 12 lakhs. That means cost of revenue is 12 lakhs. Now what are we supposed to find? Revenue from operations. So finally we have reached the stage. Revenue from operations, how to find? 12 lakhs, 25% more. If you are adding with that, then you will be getting. So 12 lakhs 25% is directly we can call it as gross profit. So gross profit is 25% of this one. If you are adding that 25% to 12 lakhs, so here we can write like this, right? 12 lakhs plus 25% of 12 lakhs will give us revenue from operations. So gross profit is 20 lakhs 25%. 12 lakh 25% means how much? 3 lakhs. So the 12 lakhs plus 3 lakhs will give us 15 lakhs, which is basically the revenue from operations. So revenue from operations, answer is 15 lakhs. Annual sales if your goods are sold at 25% of profit. So this part again I will explain. Revenue from operations, how did we find? We know that cost of revenue plus 25% of cost of revenue is revenue from operations, because they said goods are sold at 25% on cost, 25% profit on cost. That means 25% profit on which value? Cost of revenue only. Cost of revenue value, if you know, already we found cost of revenue is 12 lakhs. So 12 lakhs is the cost of revenue, means 25% of 12 lakh we have to add again, then only you will get the sales value. Revenue from operations is nothing, sales. So revenue from operations is 15 lakhs. 25% of cost of revenue is 3 lakhs. So we will be getting 15 lakhs. Is the value for that. Now coming to the next case. So how did we solve this? There is a pattern to solve this kind of questions. Nothing to worry when you are seeing this kind of questions. No need to get worried and all. What you are supposed to do is you just write simply the formulas that are present in that particular question. All the formulas you write, substitute the values and see from which value you have to start. See, in this question when you are seeing, the first thing with which we are starting the ratio itself or the answer itself is current ratio, because only current ratio related value is available in the question. So we started with that. So current ratio's answer is already given, current assets value is already given. So one amount is only missing, that is current liability. So first we solve that. Then we are going to the next ratio, because why are we going to the next ratio? That is quick ratio, because if you solve the quick ratio only, you can find out how much is inventory. Inventory is basically needed in which ratio? Average inventory calculation. So in order to reach the last part, we simply if we are saying Inventory turnover ratio is cost of revenue divided by average inventory. Answer is already 6 times. So average inventory if you found means cost of revenue finding is very easy. But in order to find average inventory, we need the values of opening inventory and closing inventory. Inventory is connected to which of the which ratios? Current ratio and quick ratio. So once we solve that only we will be getting the inventory, because difference between current ratio and quick ratio will be mostly inventory only. So that is why we solve those two ratios first. Then we came back to inventory turnover ratio, where we are writing like this, and we solve the average inventory type of questions, average inventory part, and we got the cost of revenue. Then we added 25% of that. Now coming to the debt to capital employed ratio from the following information. As you can see here, debt to capital employed ratio is the question. So what is the formula for debt to capital employed ratio? Debt divided by capital employed. Debt divided by capital employed. So as you can see here, debt, as you can see, shareholders funds are given, 8% debenture is there, current liabilities are there, non-current assets are there, current assets are also there, current liability is also there. We need debt to capital employed. Debt to capital employed, what is the formula? First of all, debt we need to find. Debt means long term borrowings plus long term provisions. So basically we know that when we are adding the liability side and when we are adding the asset side of the balance sheet, both the sides will total will be same only. So as you can see here, shareholders funds is there, 8% debenture is there, current liability is also there. These are the values that are available, and on the other side non-current asset and current asset is given. So non-current asset, current asset, if you are adding, you should get the balance sheet total. If you are removing the current liabilities from there, you will be getting capital employed, because capital employed means what? Debt plus equity. Debt plus equity, right? So if you are able to calculate, if you want to calculate debt plus equity, one formula. So if you want to calculate, we will try different formulas and see. Debt, in order to calculate debt, what is the formula? Long term borrowings plus long term provision. Here long term borrowings that is given here is only debenture. As you can see, debenture is only the long term borrowings. So we are writing 7,50,000 here, debenture value. Equity, sorry, capital employed. Capital employed. Formula is total asset minus outside liabilities, or total asset minus current liabilities. You can do that formula also. Total asset minus current liabilities. So here total asset minus current liabilities, when you are doing, as you can see, non-current asset is given, current asset is also given. If you are removing current liabilities, how much you will get? 17,50,000, 7,50,000, which will give us 25 lakhs. 25 lakhs minus 2,50,000. 25 lakhs minus 2,50,000. 25 lakh is the total of current asset plus non-current asset, minus 2,50,000 is which value? 2,50,000 is the value of current liabilities. When you are removing it, whatever is remaining, that is called capital employed. So here we are getting 22 lakhs 50,000. So one more formula is there for debt, which is, what is that? Sorry, capital employed, debt plus equity. Debt is how much? 7,50,000. Equity, only equity related one value is available, that is shareholders funds, 15 lakhs. So equity is the other name of shareholders funds only, right? So when you are adding these two, how much you will get? If you are adding debt, debt is 7,50,000 plus equity is 15 lakhs. Equity is 15 lakhs. So when you are adding this, you will be getting how much? 22 lakhs 50,000. So any of these methods you can do to calculate capital employed, because in both the cases we are getting capital employed as the same value only. So debt plus equity is also a formula. One more formula, capital employed is total asset minus current liabilities. Here current liabilities are only this, current liabilities, remove it. These two formulas. So we know debt's value, we know capital employed value. Now we can substitute the values. Debt divided by capital employed. Debt divided by capital. Debt means 7,50,000 divided by 22 lakhs 50,000. 7,50,000 divided by 22 lakhs 50,000. How much you will get? 7,50,000 divided by 22 lakhs 50,000. You will be getting 0.33 is to 1. 0.33 is to 1. So this is the value for debt and capital employed. So when to explain, first we calculated the debt. Debt is long term borrowings plus long term provision. Only one long term borrowing is given here. You know, by default debenture is a long term borrowing. We calculated that. Next is capital employed. Capital employed, how to calculate? There are two ways to calculate capital employed. Total asset minus outside liability, which is 22,50,000, or one more formula is there, debt plus equity. Debt plus equity, which is 7,50,000 and 15 lakhs. So you will be getting 22,50,000. That is another one. So in both the ways you can calculate and substitute the values in the formula. You will be getting the answer. Today's discussion, it was actually meant to make you understand one thing clearly. No matter how twisted the question is, once you try doing it from one side, one end, we can easily reach the other end without any trouble. But the thing is that you just have to put some logic and check where we can substitute the initial values that are present in the question. So which is the nearest ratio that we can solve. That is the first thing that you have to find, which is the nearest ratio that you can solve. Then you can automatically solve the other things, other values that are given here. Similarly, second ratio also you can check, because here why did I discuss this is two formulas for calculating capital employed? Because in both the formulas you should know, sometimes you may be applying one of these formulas only. So anyways, both the formula you should know to solve this kind of questions. Then only you will be confident also to attempt this kind of questions. So you should know the formula first, then only you can attempt the question first of all. But when you are attempting the question, you try out in different ways. When you are practicing and all, exam hall we don't have time for trying out different ways and all. When you are practicing, you try out the question, approach the question in different ways, so that your confusions will go. Sometimes as we are not trying out different formulas for in the same question, you may be having doubt. If I try out the formula or try out the question using that other formula, will I get the same answer or not? So to get rid of this kind of thoughts, better always try to approach the question in different ways, so that this kind of question, ratios and all, when you see the question itself, see first question itself, when you see many things are not given directly. So for a normal student or for a student who is very scared of math and all, he or she will be getting like what, confused or scared to attempt this question itself. They will just leave thinking that question is very hard. So it's not hard actually, as you know already we have solved it in within 2-3 minutes, or hardly 3-4 minutes only we took to solve the entire question. That also we took because I was explaining to you. So this kind of question should be approached in that manner only. Okay, no need to get scared of any question. You just have to approach the question in a very positive, logical manner. Okay, you have to apply some logic while solving the questions. So that's all for today. I wish you all the very best for your upcoming board exam preparations. Thank you.